Hello, welcome back. This part two, the second part two. So we are talking about trading pump and dump um, signal using. We are talking about trade. We are discussing about how to trade pump and dump signal, and we are discussing the strategy that you use and the technical indicators. So on the part one, we talked about the rules or the things that you need to look at for to verify that this is a pump and dump before you trade it. We said the first thing is that you have to identify the market trend, and to do that you need to look at it from the you use 1 day time frame and 4 hour time frame. That's the longer time frame. So the moment you use that, you identify, you look at where the market is. So basically, looking at this, you found out that this market is on uptrend, and here is the market. This is one of the basic structure of this market, right? This is one of the basic structure, and obviously we can see the nearest swing high here. The nearest swing high is around this point, right? And we look at that. So when you have looked at this, the next thing you have to do is that you go to the nearest swing high. So we are looking at the nearest swing high. So the next thing is to find the nearest swing high, and this is an obvious that the nearest swing high is here, right? So the nearest swing high is here. So as well, you have to mark this, right? You have to mark this because this will be basically the nearest swing high. It's not that, this is the point of the nearest swing high, and this is where there is an obvious resistance, right? To establish the resistance level. So this is the resistance. When you look at this, you find that this is an obvious resistance, right? So you can validate this using 1 hour time frame, and when you use 1 hour time frame, the way you have to validate if this actually is a point of resistance, there's an indicator called pivot point indicator. You can use that pivot point indicator to, these are numbers of indicators that I use to trade anyway. So this is the pivot point indicator. You can use that pivot point indicator to identify these swing. Then when you put the pivot point, then you have to set it. You come to the input, you put it to the classic, it is on the classic, and you put it on the daily time frame. You put it on the daily time frame, then you can just come here. I already removed some of the indicators. What I need is the resistance 2 and the support 2 and resistance 2 and support 1. This is the mid pivot. So that's it. So what you got to do is that I just needed the 3 days backward indicator. I can still go down. Yeah, so going down like this. So okay, if I go to the time frame, the indicator will not show. The pivot point will not show because okay, I think I need to, yeah. So this is the pivot point. I need to get it to weekly time frame. I get to weekly. When I get it to weekly, so when you look at the weekly, you find you can obviously see that point that we put on identify pivot point, identify that place as an area of resistance, right? if you look at that point, you find that, you see it, pivot point have identified this as an area of strong resistance. So our swing high resistance level is accurate. So using pivot point, now we have validated that this is an area of strong resistance, right? So the price, what it means that whatever happening, whatever the pump, the price must react to this point, react to this end before it continue in upward direction. So as we have established this, there is no need for this pivot point, although we still discuss not on this strategy on how to use this pivot point generally, but I'm just trying to use it to validate that our swing high is the accurate the point praise to praise it. If you look at it, if you look at this, okay, let me zoom out, you'll find that it shows that this is a point of resistance. So we have established that using pivot point that this is a very strong resistance. So the next thing we got to do is that after that is that I have to remove this pivot point because it's not in our I just use it to validate that actually this is an established resistance level. So now our work on 4-hour day time frame, longer time frame is done. So we channel much our attention trading the strategy. We have established this. So the next thing we have to look is that we move to the 45 minutes time frame. We move to the 45 minutes time frame, right? We move to 45 minutes time frame, and sometimes you need to go a little bit lower to 15 minutes time frame. So on 15 minutes time frame, we have to establish that this you can see the point of resistance. So the moment you have established that, right, what we have to see, we look at the structure, the market structure. When you look at this market structure, let's just look at if this market structure presents a very visible and obvious conviction that this is a market that we trade based on the rules of market structure. So we look at this. What we are trying to identify is there any pattern that point out to a healthy trend. Every market we have what we call chart pattern. So I'm looking at this. The only thing that I can see here is a little bit supply and demand, but which is not that kind big obvious. We can see a supply and demand level here, and it's not that kind obvious, and that means this pump is not good to be traded, right? Because there is no obvious fundamental, or should I call it a foundation that show that this pump is a little bit healthy. This pump basically point out to a very sharp market manipulation, right? This pump shows a very sharp market manipulation, because there is no way that we can enter this trade. So when you look at this, if the thing that you're looking at validates the rules that we are following, and you find out that there are some things that invalidate that rule. The rule, what you have to do is that you don't enter that trade, right? So you don't jump into trade pump and dump. So now yes, this pumped heavily, but it's not a pump and dump trade that we want to jump in and cash that 25% of the pump. So this is a no-go area. So on this note, because we have looked at this and other, we didn't see a market structure, we look at some of the features and we find out that it doesn't present a good place. So that means this market is a no-go area, so it is a bad market. So the moment you look at this thing is something you will do as fast as possible. You need to have a very fast internet connection and all that. So this is a no for us. So we are not trading this. It's a no for us. And if you look at it, you find out that the market pump and then start dropping instantly. That means it's a total market manipulation. If you look at the on-chain analysis of this market, you'll find out that this is a total market manipulation. Some guys just catch out on retail traders. So this is a no for us. So we'll look for another pump signal to look at if it is possible to enter. So the next signal we will look at here, the next signal we will look at is I have some list of coins that have pumped. I will use that. I will shake another one. The moment you see a pump and dump signals, these are another signal that I generated today, which I will look at. We'll start our journey from for this market doesn't have liquidity. So when you see a chart that behaves like this, what it shows that this market doesn't have liquidity. We can validate that by going on. It doesn't have, what I mean by liquidity, it doesn't have enough market volume, right? It doesn't have enough market volume. If you see a chart that behaves like this, it's a highly volatile and very highly unpredictable market. So this one is a no for us too. So because you cannot read this market, the candlestick, all things, it doesn't present a good point of view to read and interpret the chart. So basically, if you look at the coin market cap, look at this on the coin market cap, you agree with me that it's something that you shouldn't dabble into, because the trading volume and all those things. When you look at a chart, if you see a chart that is like this, that means you cannot read this chart, right? It's a very confusing chart. It's something that you have to avoid, except you want to do a pure gambling. You can jump in and do some gambling, or maybe you have a big money, you look at it when it's fall, you jump in because it might pump immediately and dump immediately. So this is a no for us. So we look for another coin that I studied today, and I discovered there is a development around the coin and possibly in my pump. So, and one of these is not Nero. So, when you put on that, just click on it. So you see that this coin have a nice candle which you can read. So the next thing we have to look is that initially this coin have pumped here, right? The coin have pumped here. So but what we are looking is what happens here. That's what we are looking at, not what have already happened here, right? But if you still look at it, the coin pump and dump and still move up, then pump and then dump heavily, and then start going downwards, right? So we still use that for this particular area. We can still use that rules. The first thing is identify the market trend. So when you identify the market trend from here, you find that the market is an uptrend before it break that trend and then reverse. So the second rule that we say that after you identify the market trend, you look for swing high and swing low, or the nearest swing or nearest point of resistance, and then when you see that, you establish your